Hello friends, welcome back. By end of this video, you will be learning about the concept of GST, what were the deficiencies in pre-GST regime, what were the deficiencies in the taxes which were there, indirect taxes which was there before GST, and how to decide whether a particular supply is an interstate supply or intrastate supply, and what are the different taxes which got merged or subsumed with GST, and what are the taxes which did not get subsumed with GST, and so on. Okay, so before starting today's class, let us straight away revise whatever we had discussed in the previous day, in the previous videos. So first we had discussed about, please note, first 5 minutes will always give for, first 1 minute or 2 minutes or 5 minutes will always give for revision purpose. This will help you in building confidence with regard to this subject, and also before you start this video you will be able to understand, okay, this is what was studied by me, whether you are remembering that point or not also you will come to know. So first we had discussed about tax. What do you mean by tax? Tax is a pecuniary burden which is laid upon individuals and property owners. It is help for funding the government expenditures. So there are different types of taxes: direct tax and indirect tax. What do you mean by direct tax? Direct tax, payer and the sufferer is same, payer and the sufferer is same person, meaning the incident and impact is on same person, whereas indirect taxes, the incident and impact is on two different person. Then direct tax is progressive in nature, indirect tax is regressive in nature. Then we studied about the features of indirect taxes. What are the features of indirect taxes? RCB will win, sir. Who's going to win the IPL this year? RCB will win, sir. R for important source of revenue to the government, C for taxes on commodities and services, B for shifting of burden, W for wider tax base, I for inflation nature, then N for no perception of direct pinch, S for promote social welfare, and R for indirect tax is regressive in nature. Then we saw the constitutional provisions with regard to taxation. We saw what is constitution. We saw what are the different constitutional provision which talks about taxation. We saw that Article 265 says no tax can be levied or collected in India unless until there is an authority of law. Then 245 said if you want to make any law for whole or any part of India, only the parliament or the central government has the power. And if the law is required to be made for whole or any part of the state, only the state government or legislature of state has the power to make such laws. Then we saw Article 246. What does Article 246 talk about? Article 246 talks about it gives the in 7th schedule of Article 246, it gives the it talks about three different lists: union list, state list, and concurrent list, which gives the list of matters or activities which can be taken care by respective governments. Then we had seen that in our constitution, which was there before the amendment, whatever constitution we had, there was no article in our constitution which was telling that both central government and state government can jointly levy a tax law. It is because of this reason an amendment was made in our constitution. Then Constitutional 101st Amendment Act came into picture. This Constitutional 101st Amendment Act came into picture, and it spoke about few different things. Article 246A was introduced because of this Constitutional 101st Amendment Act, and Article 269A was also introduced. Article 246A told, now I give the power to both the central government and state government to jointly make law with regard to goods and service tax, and I also give the power only to the central government to make law with regard to interstate supply. For making law with regard to interstate supply, there was a separate article introduced, Article 269A, which said that what is the type of tax which you are going to levy on interstate supply, and this amount which is collected by central government shall be distributed between central government and state government, and the law with regard to place of supply shall also be made by the central government only. Then we had seen the journey of GST. It is 1st July 2017 when GST came into existence in India. It is also called as appointed date. Okay. With this brief revision, let us straight away start our discussion on the concept of GST. Now, before starting our discussion on concept of GST, let us understand what was happening in pre-GST regime. Only when you know, see, it is only for this limited purpose, for understanding the concept of GST. Only when you know what was happening before GST, you will appreciate the GST law. You will appreciate the GST law. Okay, sir. Let us understand what was happening in pre-GST regime. Pre-GST. You would have seen, no, in advertisement, television, etc. Whenever we see advertisement with regard to those, some say belt or some say powder, etc. पहले में ऐसा था, इसको लेने के बाद में ऐसा हो गया. So just like that, we will see what was there before GST, and because of GST, what happened. Okay. So we'll see what was happening before GST and why is GST better than the previous indirect tax regime. Now, for understanding this, we will take an example of a supply chain which consists of 4 people. So in this our example, this supply chain will consist of a manufacturer, wholesaler, retailer, and the final consumer. These are the 4 different people who are there in our discussion. So these are the people who are there in the supply chain. What was happening under pre-GST regime? Under pre-GST regime, if a manufacturer was manufacturing something, then he had to pay a tax called as excise duty. Excise duty was payable for what purpose? Excise duty was payable for manufacture of any item, and if you are selling those products, then VAT was payable, or sales tax. Okay, we'll take an example wherein the sales are made within the same states, or these different people are there in the same state. Now, assuming the manufacturer has manufactured a TV, he has manufactured a television. Now, the tax which he had to pay on this manufacture of television is the cost of manufacture of this television is 100 rupees. Now, because he has manufactured, what will he liable to pay? He will liable to pay excise duty. Okay, so because he has manufactured this product, he pays excise duty. For easy calculation purpose, we will take the tax rate to be both excise duty and VAT rate to be 10%. For easy calculation, we will take the rate of tax to be 10%. So he has manufactured this product, he has to pay tax at 10%, excise duty at 10%. How much? Sir, 10 rupees, sir. So his total amount became 110 rupees. Now, the goods which is manufactured by him, will he keep for himself? The tax which he paid excise duty was for the purpose of manufacture. Now, the goods which are manufactured by him, he will sell it to someone else, correct? He will not keep this good for himself. So, at the time of sale, VAT was levied. Again, 10% for easy calculation. At the time of sale of this product, the government is collecting VAT. So 11 rupees is the VAT which is required to be paid on 110 rupees. So total selling price will become how much, sir? Total selling price will become 121 rupees. The total selling price will become 121 rupees. Now, this selling price of 121 rupees which is there consists of 3 different things. One, his cost plus profit of 100 rupees. So cost plus profit of 100. Then excise duty which is of 10 rupees and value added tax VAT of 11 rupees. VAT of 11 rupees. Now, the excise duty which was collected by him, this is a tax. This excise duty which is collected by him is a tax which he has to pay to central government. All these amounts, the tax which is there, the manufacturer is going to sell this product to the wholesaler. From the wholesaler, the manufacturer is going to receive how much? He is going to receive 121 rupees. The manufacturer is going to receive 121 rupees from the wholesaler, out of which he will keep this 100 rupees for himself. The manufacturer will keep this 100 rupees for himself. The 10 rupees which is there, the excise duty which is there, he is going to give it to central government. And then this 11 rupees of VAT which is there, he is going to give to state government. He is going to give this 11 rupees to state government. Now, the products are sold to the wholesaler. Wholesaler has paid 121 rupees, out of which wholesaler, because he is not manufacturing anything, he cannot take the benefit of excise duty paid by him. Sir, what is this benefit of excise duty? He cannot take the input tax credit of excise duty which is paid by him. What is this input tax credit? Under GST we'll see. As of now, just understand that he cannot take the benefit of excise duty which is paid by him because he is an wholesaler. He is not manufacturing anything. Now, so he will divide his cost into, say his cost of purchase equal to 110 and value added tax rupees 11. Sir, why value added tax you have written separately? Because on this value added tax he can take the benefit. He can take the benefit because whenever the wholesaler is going to further sell the product, whenever the wholesaler is going to further sell this product, he can take the benefit of tax which is already paid by him. See, when the wholesaler is further selling, he'll have to pay the value added tax. He'll have to pay VAT. Now, he has already paid some VAT. He will be able to take the benefit. How is it working, sir? I'll just explain. Now, say the cost of purchase for this wholesaler is how much, sir? 110 rupees. Obviously, wholesaler will not sell the product at his cost only. He'll make some profit. Assuming the wholesaler makes a profit of rupees 20 on this sale, he makes some value addition. He makes a profit of rupees 20. So his cost of goods sold is how much? Sir, his cost of goods sold is 130 rupees, sir. His cost of goods sold is 130 rupees. On that, he has to sell this product. When he is selling this product, he will have to pay something to government also. Yes, sir. He will have to pay VAT to the government. How much? 10% VAT he has to pay, sir. So how much is 10% of 130? Sir, 13 rupees VAT he has to pay. 13 rupees VAT he has to pay. So his total selling price is how much? So his selling price is 143 rupees. Meaning this 143 is what this wholesaler is going to collect from the retailer. Now, this 143 rupees which is there now, this 143 rupees consists of two things. One is the cost plus profit of the wholesaler, which is equal to how much, sir? 130 rupees, and the value added tax. How much is the value added tax? 13 rupees. Now, the wholesaler has to pay VAT to the government, correct? This VAT amount which is there, which the wholesaler has collected, 13 rupees, he has to pay to which government, sir? He will pay to state government. Why, sir, he is paying to state government? Why not he is paying to central government? Because VAT was a tax or sales tax was levied at the state levy. The revenue of VAT or sales tax is going to state government and excise duty was going to central government. So excise duty is levied only at the time of manufacture, but sales tax or VAT is levied at every time when you are selling the product. Now, what is government telling over here is, see, Mr. Wholesaler, you are liable to pay. You are liable to pay me rupees 13. Your liability to pay me, the tax which you are liable to pay is rupees 13. But do you remember you have already paid rupees 11 to me indirectly? You have already paid to me rupees 11. How did you pay rupees 11 to me? The manufacturer, when he sold goods to you, you paid something called as VAT to him. The manufacturer collected this VAT on behalf of you and he paid it to me. He paid it to the state government. State government is telling, see, Mr. Wholesaler, you are liable to pay me rupees 13, but you have already paid me rupees 11 through manufacturer. You have already paid me rupees 11 through manufacturer. So please take that benefit. So my actual liability which I am going to pay to the government, which I have to pay to the government is 13. I can take the benefit of tax. I can take the benefit of input VAT. How much input VAT? 11. Therefore, what government is telling is, pay me only 2 rupees in cash. Pay me only 2 rupees in cash. Pay me only 2 rupees in cash. You can take the benefit of 11 rupees. Sir, why not this benefit of 10 rupees? Because VAT is something which is paying to the state government and excise duty was paid to the central government. Central government and state government normally no connection is there. Meaning connection is there but they don't interact well. Next, the wholesaler sold this product to the retailer at 143 rupees. The retailer paid how much? 143, which is divided into two parts. This 143 is divided into two parts. What are these two parts, sir? Cost of purchase for the retailer, which is equal to 130 rupees, and input VAT. and VAT which he has paid is how much, sir? 13 rupees. So this is how the amount of 143 rupees is divided. Now when the wholesaler is going to sell, the retailer is going to sell this product, obviously he will take his cost, which is 130 rupees. On that he will also add some profit. Which is 20 rupees, assuming he adds a profit of rupees 20. So totally cost of goods sold is 150 rupees. On that he has to pay VAT. Why, sir, VAT? Because he's selling the product. At the time of sale of a product, you are supposed to pay value added tax. Again, value added tax at 10%. How much VAT he has to pay? Sir, 15 rupees VAT he has to pay. So what is the total selling price of this product? So the total selling price of this product is 65 rupees. The total selling price of this product is 165 rupees. So this entire 165 he is going to collect from whom? The final consumer. Now here also the government is telling, hey Mr. Retailer, you are liable to pay me VAT of 15 rupees. You are liable to pay me VAT of 15 rupees, but you have already paid me 13 rupees. When did I pay 13 rupees? You have indirectly paid me 13 rupees through the wholesaler. So take that benefit. And pay me only 2 rupees in cash. The tax which you are required to pay in cash is only 2 rupees. The tax which is required to be paid by you in cash is 2 rupees. This was what was happening pre-GST regime. In pre-GST regime, this was what happening, meaning there were different taxes levied. At the time of manufacture, there was a different tax levied. At the time of sale, there was another different type of tax levied. At the time of providing services, there was another different tax levied. So there were a different mixture of taxes which was levied on a single product. We'll take one more example where you'll understand. Now we'll take the same example. And we'll see what happens in the GST regime. If you see what happens in GST regime, only then you will appreciate the GST. Now same example we'll take, everything same. This is post GST or in GST regime. In GST regime, what is happening? Now in GST regime, the manufacturer is manufacturing a TV. Yes sir, he is manufacturing, his cost of manufacture same, points etc. will take same. His cost of manufacture is 100 rupees. Now there is no concept of excise duty, there is no concept of sales tax, there is no concept of value added tax etc. Here he has to pay only one type of tax, which is GST. Again, for easy calculation, we will take the rate of GST to be 10%. How much GST has to pay? 10 rupees GST has to pay. So his selling price is how much? 110 rupees is his selling price. So this 110 rupees is divided as his cost plus profit of 100 rupees and the GST which he has to pay to the government of rupees 10. So this entire rupees 10, he has to pay to the government. Okay sir, which government etc. that we will see later. Now this is the manufacturer. Then this manufacturer has sold the goods to whom, sir? The manufacturer has sold the goods to the wholesaler. The wholesaler has totally paid how much? Sir, the wholesaler has paid 110 rupees, which is divided into 2 arrow marks. What are these 2 arrow marks, sir? His cost of 100 rupees plus his input GST. See, the tax which you pay on your sales, is called as output tax. Under GST, the tax which you are paying on your sales is called as what, sir? Output tax. And the tax which you are paying on your purchases, the tax which you collect on your sales is output tax. The tax which you pay on your purchases is called as input tax. From wholesaler angle, it is an input which is made, it is a purchases which is made, it is an inward supply which is made by him. So the tax paid on inward supply is called as what, sir? Input tax. So input tax is how much? Sir, input tax is 10 rupees. Now same, so this wholesaler is also not going to keep this product for himself, he is going to sell it to someone else. His cost he will take 100 rupees. Obviously he will also make some profit, he will also add some value. We will take the same value addition what we took over here, 20 rupees we took over here, same 20 rupees value addition is made by the wholesaler in GST regime also. So his cost of goods sold is how much? Sir, cost of goods sold is 120 rupees. This 120 rupees, on this 120 rupees he will have to collect GST at 10%. How much GST has to collect? Sir, 12 rupees GST. 12 rupees GST has to collect. So what is his selling price? So the selling price is 132 rupees. 132 rupees. How is this 132 divided? Sir, this 132 which is there, no sir. In this 120 will go to the wholesaler. 12 rupees will go to the government. 12 rupees will go to the government. Now, what the government is telling? The government is telling whom? The government is telling the wholesaler, hey wholesaler, you are liable to pay me rupees 12. Your liability, your GST liability on your sales, your GST liability is rupees 12. This is what you are liable to pay me. But do you know that you have already paid me rupees 10? Indirectly, you have already paid me rupees 10. So please take the benefit of the tax which is already paid by you. So take the input tax credit. Take the, what do you mean by input tax credit, sir? In simple words, if you are taking the benefit, in simple words, if you are taking the benefit of the tax which is paid by you on your purchases, if you are taking the benefit of the tax which is paid by you on your purchases, it is said that you are taking input tax credit. You are taking input tax credit. Tax on your purchases is called as input tax. If you are taking the benefit of that input tax, it is called as input tax credit. Anyways, again we'll discuss about all those things when we are doing that input tax credit chapter. So how much you have paid? 10 rupees. So now here government is telling, pay me only 2 rupees in cash. Pay me only 2 rupees in cash. Similarly, wholesaler sells this product to, the wholesaler is going to sell this product to whom, sir? Final consumer. Sorry, retailer. Wholesaler is selling the product to the retailer. How much is the retailer paying the wholesaler? So the retailer is paying the wholesaler 132 rupees. This 132 is divided as cost to the retailer 120 plus his input GST. Input tax was how much, sir? Of rupees 12. It is divided in this manner. Now the retailer will also sell this product to someone. He is going to sell this product to the final consumer. Yes sir, the cost to the retailer is 120 rupees. Then he will add a profit to this amount. He will take the same profit, 20 rupees, which was added previously. Now what is the total cost of goods sold? So the cost of goods sold is 140 rupees. This cost of goods sold, on this cost of goods sold, whenever he is selling the product, he also has to pay GST. How much GST he will pay? Sir, the GST is 10%, sir. 14 rupees GST. So what is the selling price? So the selling price is 154 rupees. 154 rupees. This 154 is divided as amount going to the wholesale, the retailer will be 140 rupees, and 14 rupees is what he is liable to pay. Liable to pay government how much? Sir, 14 rupees is what he is liable to pay, but he already has input tax credit of how much? 12 rupees, correct? He already has input tax credit of 12 rupees. So pay me only 2 rupees in cash. Government is telling you, pay me only 2 rupees in cash because you have indirectly paid me rupees 12. Now pay me only 2 rupees in cash. Pay me only 2 rupees in cash. In first case, the manufacturer will pay that entire rupees 10 in cash only because we don't have the details of input tax credit. So he will pay the entire amount. Now see the difference over here. Now see the same product we took, same type of value addition we made, same profit we have added, but the same product in pre-GST regime, the selling price is how much? 165. If you were purchasing a television under pre-GST regime, you are paying 165, but under the GST regime for the same television you are paying how much? 154 rupees. There is a difference of 11 rupees. Because of introduction of GST, you are paying 11 rupees less. Sir, why sir? How am I paying 11 rupees less? You are paying 11 rupees less because under pre-GST regime, they collected a tax called as, you are paying 11, they collected a tax from you which is excise duty, the benefit of which was not given to different people. And under pre-GST regime, point number 1, they collected a tax from you called as excise duty, the benefit of which was not given to the people who are there in the next chain, next level of the supply chain. And if you see this VAT, no, if you see this VAT which they have collected from you 11 rupees, they have collected this VAT of 11 rupees in this manner. Which manner, sir? The 11 rupees which they have collected, 2 arrow marks. On your cost plus profit which is 100 and on excise duty of rupees 10, meaning on 100 rupees it is 10%, 10 rupees, on excise duty it is 10%, which is 1 rupees. So total gives me 11 rupees. Now what is happening? The VAT of 11 rupees which they have collected is on your cost plus the tax which is charged by them, correct? They have charged something called as excise duty. On that excise duty, again they are collecting one more tax called as value added tax. Again they are collecting one more tax called as value added tax. So what was happening before GST? You were paying tax on tax. You were paying what? Tax on tax. Meaning under GST there was something called as cascading effect which was happening. Under GST, pre-GST regime, under pre-GST regime, you were paying tax on tax, because of which the prices of products were also increasing. The benefit was not given to the next person and cascading effect was happening. Cascading effect was happening. So I hope you have understood what was happening pre-GST regime and under GST regime. I will explain you again what is happening under GST regime. Say for the same product you are paying 11 rupees less. Why are you paying 11 rupees less? Sir, I am paying 11 rupees less because there are no different types of taxes which are collected now. There is only one type of tax which is GST, and under GST there is no tax on tax. Under GST there is no tax on tax. So in short, if you see, GST is point number 1. If I want to make a summary of all these different points, point number 1, GST is what, sir? GST is a, point number 1, GST is what, sir? GST is a value added tax. Sir, how is GST a value added tax? If you see at each and every stage, the tax which is paid by your pocket, the tax which you are paying from your pocket is only on the value addition which is made by you. In the first case, the entire 100 rupees is the value addition which is made by the manufacturer. The entire 100 rupees which is the value addition which is made by the manufacturer. So the tax which is paying to the government in cash is 10 rupees. That is 10% on his value addition. In the second case, if you see, only rupees 20 which is there, only rupees 20, the wholesaler has added a value of 20 rupees. Only rupees 20 is the value addition, and if you see the amount which is paid by him in cash, the amount which is paid by him in cash is only 2 rupees. What is this 2 rupees? The value addition is rupees 20. 10% on this value addition is how much? Sir, 2 rupees. Meaning at each and every stage, the tax which you are paying is only the tax on the value addition. If you want to clarify it further, in the next stage, the retailer added a value of 20 rupees. Retailer added a value of 20 rupees. If I ask you what is 10% of 20 rupees, how much is it? Sir, 2 rupees. He added a value of 20 rupees. The retailer added a value of 20 rupees. The GST on this value addition is how much? Only 2 rupees. 10% is a GST rate. So the GST on this value addition is only 2 rupees. How much has he paid to the government in cash? 2 rupees. And how much is tax on his value addition? It is only 2 rupees. In short, GST is a tax on the value addition which is made by you. If there is no value addition which is made by you, there is no GST which you have to pay from your pocket. which you have to pay from your pocket, meaning whatever is already paid by you, government will be satisfied by that. Sir, can you please explain this, sir? Yes. Say for example, retailer has purchased this product. The cost, see, the cost for retail is how much? 120 rupees. 120 rupees is the cost. Now no one is buying this product from the retailer. So what he's doing is, no one is buying this product from the retailer. What he's doing is, he's selling this product at cost only. So his profit is how much? The value addition which is made by him is 0. So what will become his cost of goods sold? So the cost of goods sold will be 120 rupees. Now he has to pay 10% GST on this 120 rupees. Yes, sir. How much GST has to pay? Sir, 12 rupees. So what is the selling price, sir? What is the selling price in this case? The selling price will be 132 rupees. Correct? 132 rupees. Now tell me, how much is he liable to pay to the government? Sir, he is liable to pay rupees 12. Correct? How much has he already paid to the wholesaler? Sir, he has already paid rupees 12. So the benefit, the input tax credit which he has is rupees 12. So how much should he pay to the government in cash? 0. How much should he pay to the government in cash? 0. Sir, can you please explain this again? Yes. See, if there is no value addition made by you, there is no GST which you have to pay to the government. If there is no value addition which is made by you, you don't have to pay any GST to the government. Now, the cost of the product for the retailer was rupees 120. He made no value addition. He is making no profit. Therefore, I am adding 0 rupees as the profit. So for him, the cost of goods sold will become 120 rupees. 120 rupees, on which he has to pay GST. Because he is selling this product, he has to pay GST. How much GST? He has to collect GST. He has to collect GST. How much GST will he collect? 12 rupees. So what is the total selling price? What is the total selling price? What is the amount which the final consumer is going to pay him? He is going to pay rupees 132. He is going to pay rupees 132. Now, what is the tax which the wholesaler is liable to pay? Sir, 12 rupees is what he is liable to pay. Now, what is the input tax credit which is available with him? He has paid a tax of 12 rupees on his purchases. Therefore, government is telling, hey, Mr. Retailer, I don't want any taxes from you. Why? Because the tax which you are liable to pay, you have already paid to me through the wholesaler. The tax which you are liable to pay is 12 rupees and you have already paid to me through the wholesaler rupees 12. Therefore, the extra amount of tax I am not going to collect from you. You have not made any value addition. Very good. I will not collect any taxes from you. I will not collect any taxes from you. So point number 1, I hope it is clear. What is point number 1 telling? GST is a value added tax. It is a tax on the value addition which is made by you. If there is no value addition which is made by you, there is no GST which will be collected from government. Next. GST is a value added tax. Then second thing, if you see, under GST there is continuous chain of credit. There is a continuous chain of tax credit, meaning each and every person, there is a continuous chain of tax credit. Each and every person in the supply chain will get the benefit of the taxes which is paid by him to the previous person. Each and every person in the supply chain will get the benefit of taxes which is paid by him in the supply chain to the previous person. Now, wholesaler had paid rupees 10 to the manufacturer. He is taking the benefit of this rupees 10. He is taking the benefit of this rupees 10. I'll just erase this ones. Okay. Wholesaler has paid rupees 10 to the manufacturer. Wholesaler at the time of making rupees 12 payment to the government, he is taking the benefit of the 10 rupees which is paid by him. Similarly, retailer had paid rupees 12 to the wholesaler. Retailer at the time when he is paying the tax of rupees 14 to the government, at the time when he is paying this tax of rupees 14 to the government, he is taking the benefit of 12 rupees paid by him through the wholesaler. So under GST, at each and every level of supply chain, there is continuous tax credit which is available. There is a benefit which will be given to the next person. Now, as we all know, the final consumer who is going to purchase from the retailer, if he is selling to someone else, he can take benefit. If he is not selling, then he cannot take any benefit. So the final consumer, so what is happening over here, the entire tax which is there, how much rupees tax is the government getting? See, if you ask me, if I ask you what is the total amount of tax which the government got, in the first case the government got tax of rupees 10, correct? The government got tax of rupees 10. In second case the government got tax of rupees 2. In third stage the government got tax of rupees 2, correct? This is the amount which is paid to the government in cash, rupees 10 in first stage, in second stage rupees 2, and in third stage rupees 2. So the total amount of tax which is paid to government in cash is how much? 12 rupees, sir. So the total amount of tax which is paid to the government in cash is 14 rupees. Sorry, it is 14 rupees. Now this 14 rupees which is there, no, this entire 14 rupees which is there, no one is paying from their own pocket. No one is paying from their own pocket. This entire 14 rupees is collected from the final consumer. It is the final consumer. When I'm going to sell the goods to the final consumer, how much tax am I collecting from him? Sir, you are collecting 14 rupees from the final consumer, sir. You are collecting 14 rupees from the final consumer. And the tax which is paid by me to the government is how much? By all these different person, the tax which is paid by them to the government is how much? The total is 14 rupees. So the entire tax on sales, whatever level, the entire amount of tax is collected from the final consumer. Meaning what? The burden of the tax is shifted by the manufacturer to the wholesaler. The wholesaler is shifting the burden to the retailer, and the retailer is shifting the burden to the final consumer. Now final consumer, he is going to use the product for himself, so he is the person who is going to pay the total tax. So the total tax is paid by the, or the burden of tax is on final consumer. This is the third point which you understand by this particular discussion. So point number 1 is what? GST is a value added tax. Point number 2, there is continuous chain of tax credit which is available under GST. And point number 3, the burden of the tax is on final consumer. It is the final consumer who has to pay the entire amount of tax. Is there any other point which has to end? And one more point. Under GST, if you would have seen, at each and every stage, because there is a benefit given to the next person of the tax which is paid by him to the previous person, there is no what? There is no cascading effect. There is no cascading effect. What do you mean by this, sir? There is no tax on tax which is paid by the different people. All the different levels of people who are there, they are not paying any tax on tax. The tax on tax. Why are they not paying any tax on tax? Because at every stage they are getting the benefit of tax which is paid by them in the previous stage. Therefore, there is no tax on tax under GST. There is no tax on tax. I hope this concept of GST is clear to you all. We'll just read the theory portion once, and what is not discussed we'll discuss. Now, the concept of GST. What is the concept of GST? GST is a value added tax. What is GST? It is a value added tax which is levied on both supply of goods and services. Then GST eliminates cascading effect. The system of tax on tax is not there under GST. The tax on tax concept is only eliminated. Then GST is a destination based consumption tax. We'll come into that point. GST offers comprehensive and continuous chain of tax credit. You get tax credit, the benefit which is paid, that you get the benefit of tax which is paid by you to the previous person. So there is a continuous benefit or continuous chain of tax credit which is given to you. Then GST, under GST, the burden is borne by the final consumer. The entire GST which you are paying to the government, you are collecting it from the final consumer. It is not the one person, it is collected at each and every stages, and then finally the final consumer, the entire burden is put on him. Then GST brings uniform structure all over the India. Under GST, now this you will understand when you see the different types of taxes which you have subsumed under GST. What has happened was, what has happened is all the different types of taxes which were there before GST, be it excise duty, service tax, value added tax, luxury tax, entertainment taxes, etc., they are all now merged and became one tax. They are all now merged and became one tax, which is GST. And entire India, any place you go, they will collect only one type of tax from you called as GST. So there is an uniformity in the tax structure throughout India. What was happening before GST? Say for example, there is a shoe. Okay, say for example, how do we draw shoe? Assuming this is a shoe, okay? Assuming this is a shoe, so, okay, I don't know how it is looking. Anyways, so there is this shoe which is there, no? Assuming this shoe, I forgot the example only, in uniform, okay. This shoe, before GST, what used to happen? The same product, if it is sold in different state, say in the state of Karnataka, in the state of Maharashtra, in the state of Uttar Pradesh, the same product, there was different tax rate. In Karnataka, they were taxing shoe at 14%. In Maharashtra, they were taxing the shoe at 14%. Karnataka 10%, Maharashtra 14%. And in Uttar Pradesh, they were taxing the same shoe at 8%. Meaning, the same product had different rate of VAT in different state. There was no uniformity because state was given the entire authority. All the rights were given to the state government to collect taxes. So there was no uniformity at all. Okay. What is this destination based consumption tax, sir? We'll come to this point. We'll come when we are discussing this dual GST, no? That time we'll discuss that point. Now, this is the concept of GST, very beautiful. Now, if they ask you what is the concept of GST or what do you mean by GST, you should write this particular answer. Now, one more point I'll discuss before discussing the next topic, that is the deficiencies in indirect tax regime. Now, it is not that only excise duty or value added tax was levied. Example, we'll take one example wherein you will start hating the previous indirect tax regime. Now, before GST, what happened? No, before GST, I took my girlfriend. Okay, before GST, where is this? Okay, I'll write it again. So, before GST, what was happening? Before GST, I took my girlfriend. To a 5-star restaurant. Oh, I wanted to impress her, so I took her to a 5-star restaurant. I thought, let me propose my girlfriend today, so I took her to a 5-star restaurant. Now, we ordered in that restaurant. We did not do anything. We just ordered for 2 dosas. 2 masala dosas we ordered. The price which they charged for the 2 masala dosa was 1000 rupees. The cost which they have given was 1000 rupees, which is exclusive of taxes. Now, this masala dosa is coming to us. There is a product which, there is an item which is coming to us which we are going to eat. Therefore, they collected something called as VAT. Now, for easy calculation purpose, whatever different taxes I am going to write, we will take the rate to be 10% only. There is no 10% rate under GST, but for our easy calculation, we will take the rate to be 10%. So, for this masala dosa, which I purchased from the 5-star hotel, they collected something called as VAT from me. How much, sir? 10%, 100 rupees. So 110 rupees. Now, there is a person who is getting this masala dosa to me. There is a person who is preparing this masala dosa for me, no? So they also collected something called as services tax. They also collected on this masala dosa which they gave to me. There is a person who is getting this dosa. There is a person who is cooking this dosa, who is making this dosa for me. So they collected service tax. There is a person who is giving services to you. So pay service tax also. How much service tax? Again 10%, which is 110 rupees. Now, there was a beautiful lady. there was a beautiful lady in the restaurant which we went, 5-star restaurant which we went. There was a beautiful lady over there who was dancing. There was a beautiful person who were playing tabla, etc. We were getting entertained by watching her, by seeing that beautiful girl dancing, by that tabla music, etc. We were getting entertained. So they levied something called as entertainment tax also. They levied, because we went over there, because we are getting entertained by watching them, they levied something called as what? Entertainment tax. Again 10%. How much, sir? 121 rupees. So how much? 1331. Now, because I went to a 5-star restaurant, I took my girlfriend to a 5-star restaurant, they also collected something from me called as luxury tax. They also collected something from me called as luxury tax, again which is equal to how much? 10%. They collected something called as luxury tax from me equal to 10%. What is the total, sir? 133.1. So this is the total amount which is paid by me, which is 1464.1 rupees. Meaning, for eating 2 dosas, one for myself, one for my girlfriend, for these 2 dosas which I purchased in a 5-star restaurant, I paid how much, sir? I paid rupees 1464 rupees. See, the dosa costed me how much? The dosa costed only 1000 rupees to me. I paid an extra 464.1 rupees as tax. I paid to different government. See, VAT was going to state government, service tax was going to central government, entertainment tax state government, luxury tax state government. So for a single product which is purchased by me, for a single supply which was made to me, they collected different types of taxes. And every time they are collecting tax, they are collecting tax on tax. There was a cascading effect also which was happening. Meaning, for a single product which was purchased by you, you were supposed to pay a lot of taxes. Now you paid extra 464 rupees just as a tax. You just paid 464.1 as tax to the government. You would have purchased another dosa in the same 5-star hotel. Sir, why did you take your girlfriend to 5-star hotel? You could have gone to some normal hotel, no sir, where 50 rupees is one dosa. Very tasty also when compared to 5-star. I understand, but what to do? Girlfriend, I wanted to impress, no? Okay, so, sir, why did you take this example? For teaching you the deficiencies which were happening in pre-GST regime. What were the different deficiencies which were happening in pre-GST regime? What was the need for GST to come into India? Why was it necessary that GST should be levied in India? We should get something called as GST in India. What was the need of GST? So this you will understand by understanding the deficiencies in the existing indirect tax laws. What were the deficiencies? So in examination they can ask you what was the need of GST, or they can ask you what are the deficiencies in existing indirect tax regime, or they can tell GST in India is a cure for ills of existing indirect tax regime. GST is a cure for all the illness which was there in existing indirect tax regime. Tell me how. Tell me how. So these 3 different questions can be asked. Is it important, sir? Yes, it is important. What kind of question? Point number 1, what is the need of GST in India, or what are the deficiencies in existing indirect tax regime, that is pre-GST indirect tax regime. Point number 3, GST is a cure for all the ills or illness of existing indirect tax regime. Tell me how. Okay, so these are the 3 different questions, 3 different ways they can ask question on this. Answer is same. What is the answer? Point number 1. What was happening? See, double taxation for a transaction by treating them both as goods and services, as the distinction between goods and services was often blurred. There was a blurriness in distinguishing whether a particular product is treated as goods or services. Meaning what, sir? Say for example, pre-GST regime, if I would have purchased a software in this CD, if I would have purchased a software in a pen drive, if I would have purchased a software under pre-GST regime, now central government was telling there is a software which is made by this software company. So the software is the making of this software, the customizing of the software for you is a service which is provided by that company to you. It is a service which is provided by the company to you. And what the state government was telling, see, the software is coming in a CD, no? The CD is movable, no? So it is goods. The state government was telling, goods, definition of goods was anything which is movable is goods. So state government is telling, see, software is coming in a CD, no? So this CD is moving, no? The software is coming in the pen drive, no? So the pen drive is moving, no? So that software shall be treated as goods. So for this product, they were never clear whether the software is goods or services, and they were collecting both VAT and service tax. They were collecting both VAT and service tax. So what was happening? There was double taxation happening for a single transaction of supply of goods or for a single transaction of supply of services by treating it as both goods and services. By treating it as both goods and services, as the distinction between the service and goods was often blurred, as the distinction was not clear whether to treat it as goods or whether to treat it as services. It was not clear. Point number 1. Point number 2. CENVAT means central value added tax. In this material, wherever I have used CENVAT, it is mostly in chapter number 1 only. CENVAT means excise duty, nothing but central value added tax. Actually, if you see, excise duty is also a value added tax only. You are making a value addition. You have manufactured a product. Because you have manufactured a product, pay me excise duty. That is what government is telling. So that is also a value added tax which is taken by the central government, which is collected by the central government from you. Now this CENVAT, what sir? This central value added tax, that is CENVAT, and the state level VAT. The state level VAT and the CENVAT which was there, they were essentially a value added tax only. They were essentially a value added tax only, but still the benefit of one was not given to another. The benefit of CENVAT was not given to the VAT. The benefit, if you would have seen over here, this 10 rupees excise duty, I paid 1 rupees extra tax on this 10 rupees. Tax on tax which happened. Why? Because the benefit of the tax which is paid by me to the central government was not given to the tax which is payable by me to the state government. The tax which was payable by me to the state government, because they were telling, see sir, central government is central government, state government is state government. Central government wants its own tax, state government wants its own tax. So those CENVAT and state VAT were essentially a value added tax. They were both essentially a value added tax. The set off of one against the credit of another was not possible. The setting off of one credit with the another is not possible at all. Why? As CENVAT was a central levy and state level VAT was a state levy, because CENVAT was collected by the central government and value added tax was collected by the state government. They told, I am not going to give you the benefit. Who told? Both the government started fighting. This is a tax which I will take. State government told, this is a tax which I will take. Then there were now in a state, as you have seen, you saw this example, no? You saw this example, 100 rupees is going to state government, 121 rupees going to state government, 133 rupees going to state government, meaning in a same state, the state government was collecting different types of taxes. Nonsense. The same state government, for a same transaction, it is collecting a value added tax, it is collecting entertainment tax, it is collecting luxury tax, etc. So all these different taxes were not merged by the government only. State government only did not merge the different types of taxes which was collected by it. What is this point telling, sir? There were several state taxes there were several taxes in the state, such as luxury tax, such as entertainment tax, etc., which were not subsumed in VAT. They were not subsumed, or they were not merged with the value added tax. All these different taxes which were collected by the state government were not merged with VAT. Then next point says what? The VAT on goods was not integrated with the tax on services, meaning on goods you were supposed to pay VAT, on services you were supposed to pay service tax. There was no integration at all, meaning for a single product, why are you paying both goods and say service tax and both value added tax? There should at least be some integration. No, there was no such integration. Reason being, VAT is collected by state government, service tax is collected by central government. The VAT on goods was not integrated with the tax on services at state level, and to remove the cascading effect of services, and because of which cascading effect also increased, and they never removed also. Then one more, apart from all these nonsense things, what used to happen? See, VAT was collected before GST. VAT was collected if you are making a supply within same state. If you are making sale and purchase is happening within same state, then value added tax. If you sell it to another state, if you sell the goods to another state, they used to collect something called as CST. They used to collect something called as what? Central Sales Tax. CST was another source of distortion in terms of cascading nature, since CST was not vatable. CST was non-vatable means what, sir? Meaning the benefit of the taxes which is paid by you as CST was not given for whatever sales you are making within the state, because CST, again, it is central sales tax going to central government, tax levied by central government, and VAT is a tax which is levied by state government. So these are the different deficiencies in existing indirect tax regime. What are the deficiencies, sir? Point number one, there was double taxation happening for a single transaction, as by treating it as both goods and services. There was the central value added tax and state value added tax were not integrated, and the credit was not given to both of them. There were different types of state taxes which were not merged with value added tax, and the VAT on goods and the tax on services were also not integrated, and CST was another source wherein it was not vatable. Whatever CST is paid by you, the benefit cannot be taken by the next person. So these were the different deficiencies in the existing indirect tax regime. Because of this deficiency in existing indirect tax regime, the need arose to start a new GST, a new law, a new form of indirect tax law, which is GST. Anyways, this is clear. Next point. India, there are different types of models under, there are different models of GST. There are different models of GST. India follows dual GST model. In India, we are following dual GST model. There was one point over here which I didn't discuss now. I'll discuss that now. India follows there are different models of GST throughout the world. Around 167 countries in the world has adopted GST as their type of indirect tax. They are collecting GST in their country. So India also started collecting GST from 1st of July 2017. The model which India adopted is dual GST model. Sir, what do you mean by this dual GST model? Meaning, for a single transaction of supply, the tax is collected by both. The tax is collected by whom, sir? The tax is collected by both central government and state government. If you are selling a product, on that product, the tax which you are going to pay, the GST which you are going to pay will go to both central government and state government. If you are selling a product in India, the tax which you are going to pay on that particular product, that tax amount will go to both central government and state government. Why, sir? Because India is following dual GST model. There are different GST models in which India is following dual GST model. You sell a product, I have sold this pen, you pay the tax to central government also, state government also. You provide a services, I am providing you services, I have to pay tax to the central government also and state government also. So, why did India adopt this dual GST model, sir? Oh sir, why did India adopt dual GST model? Why didn't they adopt that single GST model wherein the tax will directly go to the central government and then central government will distribute the amount to different people? This is because India has a federal structure. In India, the powers are distributed to both central government and state government. State government has its own power. They can have their own legislature, etc. Central government has its own power. So it is because of the federal structure of Indian economy which we have, Indian government which we have. The country has a federal structure. So the levy of taxes also was distributed accordingly. We followed dual GST model. India has adopted dual GST model. Sir, what do you mean by dual GST model? I'll repeat. Dual GST model is a model under GST where for a single transaction, both central government and state government are simultaneously going to collect tax from you. They are simultaneously going to collect taxes from you. If I sell a product, if I sell this pen, both central government and state government will collect tax from you. Both central government. It is not that you pay first to the central government, then pay to the state government. No. Both of them will collect at a time on the same product for a sale of particular product. India has adopted dual GST model in view of federal structure of the country. Because we have federal structure, we have followed dual GST model. Recently, what is happening? Because of following this dual GST model, the center and the state simultaneously levy GST on taxable supply of goods or services or both, which takes place within a state or an union territory. If you are making any supply within your own state, if you are making a supply within the same union territory, if you are making a supply within the same state or same union territory, they will collect taxes from you. Who will collect? Both central government and state government will collect taxes from you. That is, they will collect CGST and SGST if you are making a supply in your own state, and they'll collect CGST and Utgst if you are making a supply in the same union territory. We'll understand all these things one by one. Thus, the tax is imposed concurrently by center and the state. The center and state simultaneously tax the goods and services. The center and state simultaneously tax the goods and services. So different types of taxes which are there under GST is CGST, SGST, IGST and UTGST. There is something called as GST compensation cess also. That is something which is discussed at final level. So these are the different types of taxes. CGST means what, sir? CGST means Central Goods and Services Tax. Who is collecting it? It is collected by central government. CGST is Central Goods and Services Tax. It is collected by central government on what? On intrastate supply. If you make any intrastate supply, central government is going to collect a tax from you. That tax which central government is collecting from you is called as CGST. Then there is something called as SGST. What do you mean by SGST, sir? State Goods and Services Tax. State Goods and Service Tax. Who is collecting the State Goods and Service Tax? The state government is collecting. Who is collecting? The state government. When will they collect? They will collect when there is an intra-state supply. Intra-state supply. Then we have IGST, which is called as Integrated Goods and Services Tax. Who is collecting this IGST? The central government is going to collect this IGST on what type of transaction? If it is a interstate supply, they are going to collect it, and whatever IGST is collected by the central government, that will be apportioned by the central government to central government and the consumer state. They will apportion it to central government and consumer state. Sir, what is this consumer state? Just a second, I'll discuss. First I'll tell the last point. Then there is something called as UTGST, which is which is Union Territory Goods and Services Tax. It is collected by whom, sir? Very important. It is collected by an union territory without state legislature. It is collected by an union territory without its own government. An union territory which does not has its own government, that union territory will collect this SGST. What do you mean by this, sir? In India, we have different union territories, correct? I'll just write it over here. In India, we have how many union territories, sir? In India, we have totally, sir, as on today, we have totally 9 union territories. Actually, it is 8 union territories. Last year, one union territory got merged with another. So we have totally how much, sir? 9 union territories. Which are these different union territories? Sir, Andaman Nicobar. Oh, sir, Lakshadweep. Oh, sir, Dadar and Nagar Haveli. Sir, Diu and Daman. Then, sir, Puducherry. Pondicherry, which is there, no? Puducherry. Sir, then we have Delhi. Sir, then we have Chandigarh. And sir, then we have 2 new union territories, which is Jammu and Kashmir and Ladakh. So these are the total union territories which are there in India. Now, out of all these different union territories which are there in India, Puducherry, Delhi and not Ladakh. Puducherry, Delhi and what, sir? Jammu and Kashmir. These are the union territories which can have their own government. Sir, I didn't understand this. Meaning, normally, what is the essence of union territory? Union territory does not have their own government. Normally, the President of India will appoint a person. He will appoint a person who is going to take care of this union territory. It is the President of India who is going to appoint a lieutenant who will take care of this union territory. So this President of India, the lieutenant should directly report to the President of India. He is directly going to report to the central government with regard to the matters connected with the union territory. But Puducherry, Delhi and Jammu and Kashmir, these are the union territories which have the authority to make their own government. For example, in Delhi, we have a government. Delhi is not a state. Please note, Delhi is not a state. It is a union territory only. But Delhi has its own government. Aap Sarkar is there. Arvind Kejriwal is the CM of Delhi. Similarly, Puducherry also has its own government. Similarly, Jammu and Kashmir, as of now, it is not having, but they have the right to make their own government. As of now, it is not there, but still, Jammu and Kashmir also has a right to make the government. Jammu and Kashmir also has the right to make their own government. So these are the different union territories. These union territories are called as state. For the purpose of GST, these 3 union territories are called as what, sir? State. Apart from this, whatever union territories are there, no? On all these union territories, if you make an intrastate supply, if you make what? If you make a supply within that union territory, you have to pay something called as Sgst and Utgst. But if you make an intrastate supply in Delhi, then you will have to pay Cgst and Sgst. You will have to pay something called as Cgst and Sgst. I hope this point is clear. I'll repeat this point. See, Utgst is a tax which is levied in an union territory which does not have an authority to make its own government. So it is levied in union territory without legislature. Union territory without legislature. Which are the union territories without legislature? Andaman Nicobar, Lakshadweep, Diu Daman, Dadar Nagar Haveli, Chandigarh and Ladakh. These are the union territories which don't have the power to make the government. Here, the President of India is going to appoint a Lieutenant General. He is going to report to the President of India. He is going to take care of these union territories. But however, Puducherry, Delhi and Jammu and Kashmir have the power to make their own government. They have been given the power to make their own government. Under GST, for the purpose of GST, the union territory with a separate legislature which can have their own state government are called as state. And therefore, in these union territories, if you are making an intrastate supply, you will have to pay Cgst and Sgst. Normal union territories which cannot have their own state legislature, there if you are making an intra-state supply, you will have to pay something called as CGST and Utgst. CGST and Utgst. Okay, now I hope this Utgst point is clear. Now I'll discuss about this consumer state point. Sir, this consumer state point and also this point, destination based consumption tax. GST is a destination based consumption tax. We will discuss this, both of these points now. Now what is this point telling, sir? Now see, if I make a supply within the state, that is if it is an intrastate supply or intra-union territory supply, I am going to charge something called as CGST and Sgst. CGST and Sgst or CGST and Utgst. But if I make an interstate supply, sir, if I make an interstate supply, then what will I have to pay? I will have to pay something called as IGST. Now, as we all know, this IGST consists of two things. This IGST consists of the share of central government and it consists of the share of tax to the state government. Now, IGST amount which is there, which you are paying, the tax which you are paying as an IGST, this will be apportioned between the central government also and state government also. Now, the question which arises is, we know central government is only one. The question which arises is, which state will take the benefit of this Sgst portion? Which state will take the 50% of the IGST component? 50% is going to go to central government. Other 50%, which state is going to take? For example, say the total IGST amount is 1000 rupees. I know that the central government will take 500 rupees and I know that state government will take 500 rupees. The question is, which state government? Which state is going to take this 500 rupees, the other 50%? For example, there is a supply which is made from Bangalore to Chennai. There is a supply which is made from Bangalore to Chennai. Okay, so there is a company called as Priya Sarees in Bangalore. Priya Sarees has sold goods to Rajnikant Sarees in Chennai. Priya Sarees has sold goods to whom, sir? Rajnikant Sarees in Chennai. Priya Sarees is in Bangalore. Rajnikant Sarees is in Chennai. Priya Sarees is in Karnataka. Rajnikant Sarees is in Tamil Nadu. Okay, not okay. Okay, sir. So if a sale has been made from one state to another state, what is going to be levied? Assuming Priya Sarees sold goods worth rupees 10 lakh. So for this sale of rupees 10 lakh, Priya Sarees has to pay some tax. Yes, sir. What type of supply it is? Sir, it is an interstate supply. We'll come to that point. Just right after this discussion, we will discuss what do you mean by interstate supply, what is intrastate supply, how do we levy that inter and intrastate supply. Now, there is a sale made of 10 lakh rupees by Priya Sarees to Rajnikant Sarees. On this sale, they have to pay something called as IGST. How much? For easy calculation, we'll take the rate to be 10%. So how much GST they have to pay? Sir, 1 lakh. So the total amount which Rajnikant has to pay Priya is how much? Sir, 11 lakh rupees. 11 lakh rupees. Now the question which arises over here is the IGST, as we just now saw, the IGST will be collected by the central government and then it will be apportioned by the central government to the state government and central government. So this 1 lakh rupees which is there, which you have paid as IGST, I know that central government is going to take 50%, which is 50,000. But my question is, which is the state government which is going to take this 50,000? Is it the state government of Karnataka? Is it the state government of Karnataka or is it the state government of Tamil Nadu? Which state is going to take this? Think. Which state will take this 50,000 rupees, which is the Sgst component of IGST, which is that Sgst component of IGST? Which state government is going to take? Is it state government of Karnataka or state government of Tamil Nadu. Now, Karnataka state government will tell what? Karnataka state government is going to tell, see sir, see Mr. The Karnataka government is going to tell the government of Tamil Nadu, see Mr. Government of Tamil Nadu, where was the sale made from? The sale was made from our state, correct? The sale was made from our state, so the benefit, the revenue also we will only take. We had made a sale to your state. If we were not making the sale to your state, then you would have not got this sari. You would have not got this sari. We made the sale to your state, so we will take the Sgst component. State government of Tamil Nadu is telling, sir, wait, patience. This is not our Kaveri dispute wherein you are supplying water, we are drinking water. Wait, patience you should have. Tamil Nadu government told, see sir, you made the sales to us, correct? You made the sales to us, but if I would have not purchased this product from you, what is the tax which you would have got? What is it telling? It is because people from our state are purchasing your products. It is not because you are selling it to us. It is because we are purchasing this product. It is because we are purchasing this product you can make sales to us. If we were not purchasing only, how can you make this sales to us? If we are not ready to purchase, how will you make a sale to us? This is what Tamil Nadu government told. Karnataka government is telling, I don't care whether you are purchasing or not. We are making a sale, no, I want the benefit. Tamil Nadu government said, I don't care whether you have sold the goods or not. I purchased from you, no, so you are making the sale. I could have purchased from some other person also, no. Why did I purchase only from you? So they started fighting. Karnataka, Tamil Nadu, already we have a fight of Kaveri. Apart from that, they also started fighting for this particular thing. Taka. So they started fighting for this particular matter. So the matter went to the highest authority which we have, that is Modi. Mr. Modi, oh Modi. Yadurappa and Amma. Appa and Amma went to Modi. Appa said, see sir, Modi sir, I am BJP, you are BJP, we should be one, no sir. He said, wait, what is the doubt? You should tell me first what is the problem you have. We will become one afterwards. Yadurappa told, Modi, I made a sale to Tamil Nadu. The Tamil Nadu of rupees 10 lakhs and 1 lakh was the GST, IGST which was collected by me on that sale, in which I gave you your share. Who is telling? Yadurappa is telling, I gave you your share, 50,000 rupees I gave you, but the other 50,000 I want, and when I am taking that other 50,000, Amma is telling don't take. Amma told Modi, I understand that you respect all the women in India, so you respect my words also. Please think before giving a proper judgment. I understand I am not BJP government, but still, please respect my words and then decide. Modi told, okay, tell me, what is your point in this? Amma told, see Modi, if I would have not purchased this product from him, can he sell it to me? If I would have not purchased this product from the Karnataka, can that Yadurappa sell it to me? He said no. So, if you see what is happening actually is, the people from my state, the state of Tamil Nadu, the people from my state are actually working hard. They are working hard so much and they are earning money. And the money which is earned by them, they are purchasing a product. By the money which is earned by them, they are purchasing a sari. Now they are working hard in my state, they are living in my state, they are eating in my state, and the tax they want, the tax amount which they have to pay is in the state government of Karnataka. Is this right? They are eating, living, dying, etc. in my state. Only the tax amount you are asking me to pay to the Karnataka government. Is it right? Is it right? So Modi government thought about it. The government sat and thought about it. Then the government decided whatever Amma is telling is correct. If there is no consumer at all, what the government then finally told, if there is no consumer for a product, the product itself is not there. Therefore, there should first be a consumer. It is the consumer who is going to consume the product, who is going to purchase the product. So let the revenue of this Sgst component, let the revenue of this Sgst component go to the consumer state. Let the revenue of this Sgst component go to consumer state. Therefore, it is because of this reason GST is also called as destination based consumption tax. GST is also called as what, sir? Destination based consumption tax. What do you mean by this destination based consumption tax, sir? Destination based consumption tax means the revenue of the Sgst portion, the revenue will go to that state where the goods are finally consumed. The destination of the goods, where the finally goods are these goods are consumed, that state will take the revenue of that Sgst component. That state is the state which is going to take the revenue of this Sgst component. Why, sir? Because it is a destination based consumption tax. Okay, I think the time of this video has, as of now, I think not exceeded. So we have discussed about why GST is called as destination based consumption tax, because the place where the goods are finally destined to, the place where the goods are finally consumed, that state will get the revenue of Sgst component. So IGST which is there, the revenue of IGST will be apportioned between central government and state government, which central government will take central government one only, and the state government which is going to take that Sgst part of IGST is the consumer state. It is the consumer state. So normally CGST plus SGST is equal to IGST. IGST is CGST plus SGST. So in your examination, if they give the rate of IGST as 18%, that means CGST is 9%, SGST is 9%. Okay, that is something which you should keep in mind. Now we'll discuss these two items. What I'll do is we'll discuss inter and intrastate supply now, the taxes which are subsumed under GST, and the benefits of GST plus GST common portal, and we'll complete this discussion, the chapter. We'll discuss this chapter. The next video will complete this particular chapter. So as of now, we'll discuss only what do you mean by inter and intrastate supply. After that, the taxes which are subsumed under GST will be discussed. Taxes which did not get subsumed under GST, what are the benefits of GST, and what is the GST common portal, and what is this GST council. We'll discuss those things. Now, the question which you as a student will be having from our discussion, that sir, you are talking about IGST, you are talking about CGST, SGST. Now how should I determine whether it is IGST or CGST, SGST? For that, we know, sir, we should see whether it is interstate supply or intrastate supply. Now sir, what is interstate supply? What is intrastate supply? That you tell us, sir. What do you mean by interstate supply? What do you mean by intrastate supply? That you tell us. So for deciding how to decide whether the nature of supply is interstate or intrastate, how to decide whether IGST is going to be levied or CGST, SGST is going to be levied, that is in this manner. To decide, you should see two things. You should see the location of supplier and place of supply. You should see what, sir? You should see two things. One is the location of supplier and the other thing is place of supply. If the location of supplier and the place of supply is in same state or same union territory. If what, sir? If the location of supplier and what? The place of supply. If what? If the location of supplier and the place of supply is in same state or same union territory, then it is intrastate supply. Then it is what, sir? Then it is intrastate supply. If it is an intrastate supply, you are going to levy something called as CGST and SGST. If it is intra-union territory, CGST and UTGST. Please note, under GST, if a supply is made within same union territory, that is also called as intrastate supply only. That is also called as intrastate supply only. Okay, I'll repeat. There are two friends, location of supplier and place of supply. If these two friends are together, intrastate supply. If these two friends are away from each other, it is interstate supply. If these two friends are away from each other, it is interstate supply. So if the location of supplier, if the location of supplier and place of supply is in two different states, it is in two different states or two different union territory, or one state and one union territory. If location of supplier and place of supply is in two different states or two different union territories or one state and one union territory, then it is called as interstate supply. And if the transaction, the nature of the supply is interstate supply, I will levy something called as IGST. If the nature of a transaction or nature of a supply is inter, then I will levy something called as IGST. Now, I will levy something called as IGST. Now, in simple words, if I want to tell this, what do you mean by interstate supply, intrastate supply? In our college days or school days, not in school days, normal in college days, you would have seen something happening. Sir, what thing happening, sir? You would have seen in college days that a competition is happening. So there are totally 6 colleges, college 1, 2, 3, 4, 5, 6. If the competition, whether you are, for example, some basketball match is happening. If the basketball match competition is happening between college 1, 2, 3, 4, 5, 6, if it is happening between the college, different colleges, then that type of match was called as intercollegiate match. That type of match is called as what, sir? Intercollegiate match. If the matches are happening between two different colleges, it is intercollegiate. If the match is happening in same college but different class, for example, there is a college which has PCMB, which has PCMC, etc., PCME. So in science they have biology separate, computer science separate, electronics separate. If the match is happening between them, these types of matches are called as intracollegiate match. These types of matches are called as intracollegiate match. If you are competing with your own people, then intra. If you are competing with peoples of some other place, then it is called as inter. Then it is called as inter. Inter, ter, ter, intra, tra, tra, ter, tra, ter, tra. So, anyways, now let me give different examples to you and let us decide whether that point is called as intrastate supply or interstate supply and what is required to be levied. Again, please note, definition of interstate and intrastate supply we will study in a chapter called as supply. Not supply, charging section. Chapter number 3 we will study that again. Now, so we will take different example. Supply is made from Karnataka to Karnataka. There is a place called as Bangalore in Karnataka. There is one more place called as Mysore in Karnataka. Supply is made from Bangalore to Mysore. What type of supply it is? Sir, it is an intra-state supply. What are you going to charge? Sir, Cgst, Sgst. What type of supply it is? Intra-state supply. What are you going to charge? Cgst, Sgst. Then, example number 2. A supply has been made from Karnataka, Bangalore in Karnataka to Goa. A supply has been made from Karnataka to Goa. Sir, from Karnataka to Goa, no sir, it is interstate supply, sir. Because Karnataka is a separate state, Goa is a separate state, and I am going to levy something called as IGST. I am going to levy something called as IGST. Correct. A supply has been made from Bangalore to Chennai, meaning from Karnataka to Tamil Nadu. Sir, if a supply has been made from Bangalore to Chennai, it is an interstate supply, sir. I will have to levy something called as IGST. I will have to levy and collect something called as IGST. Case number 3. There is a supply which is made. There is a supply which is made from Chennai to Puducherry, Pondicherry, which is there. Sir, Chennai, Pondicherry. Sir, there is this Tamil Nadu. Inside Tamil Nadu, there is this Pondicherry or Puducherry. Now, there is a supply made from Tamil Nadu to Puducherry, from a state to an union territory. From a state to an union territory. A supply is made from one state of Tamil Nadu to the union territory of Puducherry. It is interstate supply and it is IGST. It is called as what? Interstate supply and IGST. Now, a supply has been made from Mumbai, which is in Maharashtra, to Jaipur in Rajasthan. Sir, supply made from Mumbai in Rajasthan to Jaipur in Rajasthan. Sir, it is two different places, sir, two different states. So it is interstate supply and I am going to charge IGST. A supply is made from Mumbai in Maharashtra to Andaman Nicobar. A supply has been made from Mumbai in Maharashtra to Andaman Nicobar. What type of supply it is? Sir, it is also interstate supply. A supply has been made from one state to one union territory. It is also called as interstate supply. I am going to levy something called as IGST. Now, next point. A supply has been made from Andaman Nicobar to Andaman Nicobar. Meaning, a supply is made within the same union territory. This type of supply is called as intrastate supply. What am I going to pay? I am going to pay Cgst and Utgst. I am going to pay something called as Cgst and Utgst. Sir, what if the supply is made from one place in Delhi to another place in Delhi, sir? What if the supply is made from one place in Delhi to another place in Delhi? Then what is the nature of supply? The nature of supply in that case is again same intrastate supply because it is made in same union territory. Now, as we all know, Delhi is an union territory which can have its own government. That means what? In Delhi, if you are making a supply within Delhi, I will collect something called as Cgst and Sgst from you. For the purpose of GST, if you have an union territory with a separate legislature, you are called as state. Therefore, whatever supply you are making over there, I am going to levy something called as Cgst and Sgst from you. Sir, what if a supply has been made from Chandigarh, which is an union territory, to Diu and Daman, sir? What if a supply has been made from one union territory to another union territory? If a supply has been made from one union territory to another union territory, it is called as interstate supply and you are supposed to pay something called as IGST. IGST is something which you have to pay. Sir, what if the supply has been made from London to Mumbai? Meaning from place outside India to India. They are also called as interstate supply and you levy IGST. We'll discuss this in future chapters. Sir, what if the supply has been made from Delhi to USA, America, sir? If the supply has been made from Delhi to America, it is export. That is also treated as interstate supply and I levy something called as IGST. That is also treated as interstate supply and I levy something called as IGST. I hope all these points are very clear to you all. In today's discussion, in today's video, in today's class, we have discussed three things. What did we discuss? What is the concept of GST? Then what are the deficiencies of in previous indirect tax regime? Then what do you mean by dual GST? And how should you determine whether a particular supply is an interstate supply or intrastate supply? In our next video, we'll be completing the topic number 1, which is introduction and overview of GST. Okay, I conclude this. Thanks a lot. I hope you are enjoying. 962002-2004 is my number. Any doubt you have, you can WhatsApp me to this number. Thanks a lot. Enjoy life.